Good morning and welcome to Top of the Morning by Mint, your daily shot of sharp business intel, global trends and market movers. It's Monday, May 19th. I'm Nelson John. From a make or break earnings week on Dalal Street to Ola's billion-dollar battery delay, India flexing trade muscle with Bangladesh, and Adani diving deep into undersea warfare tech, today's episode is packed with power plays, policy pivots, and a whole lot of geopolitical tension. Let's cut through the noise and get you up to speed in under 10. It's a high-stake week ahead on Dalal Street as over 660 companies, including several market heavyweights and PSUs, gear up to announce their Q4 results for FY25. Starting today, investors will watch keenly for cues on earnings momentum, outlooks, and sectorial recovery. The Q4 earnings season has surprised positively. Nifty 500 firms are clocking 10.5% growth, outpacing large caps, says Vinod Nair of Geojit Financial. That optimism could get another boost as companies like Power Grid, ONGC, Hindalco, Indigo, and ITC line up their results. Today kicks off with DLF, Pfizer, and Power Grid. Tuesday has Hindalco, Dixon, and Max Healthcare. Midweek, all eyes will be on ONGC, Indigo, and Mankind Pharma. ITC, Sun Pharma, and Grasim takes the stage on Thursday, followed by JSW Steel, Ashok Leyland, and Reliance Infra on Friday. Even Saturday is spared with JK Cement and Indigo Paints wrapping up their earnings parade. With small and mid-caps showing a revival, this week's result could set the tone for the next market rally or correction. In a fresh twist to Pakistan's economic saga, the IMF has laid down 11 new conditions in exchange for a $1 billion bailout, bringing the total aid to $2.1 billion so far. The move is part of a broader plan to stabilize Pakistan's fragile economy, but it comes at a steep cost. Among the key demands, approval of a 17.6 trillion rupees budget by June, reforms in agricultural income tax, annual rebasing of electricity and tariffs for gas, and the phasing out of incentives for special technology zones by 2035. The IMF also wants Pakistan to maintain the real purchasing power of its citizens by inflation-adjusting cash transfers and to shift industrial power consumption to the national grid via a captive power levy. These reforms are vital to restore economic stability and ensure inclusive growth, the IMF said. But there is more at stake. Rising India-Pakistan tensions could derail these targets, the fund warned. As Islamabad walks this tightrope, the next few months will test both its political resolve and public patience. India has just turned up the heat on Bangladesh, with a fresh set of port restrictions that could choke nearly half of Dhaka's exports into the country. According to trade think tank GTRI, the move affects $770 million worth of goods, including Bangladesh's crown jewel, ready-made garments. A government notification dated 17th May bars land route access for key exports like garments, processed foods, and plastics, now limiting them to just two seaports, Nhava Sheva and Kolkata. Overland trade via West Bengal and the Northeast, well, it's effectively off the table. While New Delhi hasn't officially cited geopolitical motives, trade watchers link the curbs to Dhaka's recent anti-India trade measures, including bans on yarns, rice and paper, plus new transit fees. All this as Bangladesh grows cozier with Beijing, signing $2.1 billion in deals and inviting China into sensitive infrastructure projects once led by India. India is using economic levers to signal its discontent, says economist Abhash Kumar. Despite the chill, experts say the relationship isn't beyond repair. But with trade down to $12.23 billion in FY25 and strategic trust thinning, this border may see more friction than friendship in the months ahead. In a strategic deep-sea move, Adani Defense and Aerospace has joined hands with US-based Spartan, a group company of Elbit Systems, to bring cutting-edge anti-submarine warfare ASW technology to Indian shores. The deal, announced Sunday, will localize the assembly of complex sonobuoy systems, which are critical underwater devices used to detect and track enemy submarines. With this, Adani becomes the first Indian private sector company to offer indigenized sono-buoy solutions, a leap towards India's long-standing goal of reducing defense imports. Jeet Adani, VP of Adani Enterprises, called it an imperative for safeguarding sovereignty, adding that the move aligns with India's broader Atmanirbhar Bharat push. The systems will serve the Indian Navy and potentially global markets as well. For decades, India has relied on foreign OEMs for this tech. This partnership changes that, says Ashish Rajvanshi, CEO of Adani Defense. Spartan CEO Donnelly Bohan echoed the sentiment, saying the collaboration would help create high-tech jobs, localized production, and reliable ASW system built to suit India's naval needs. This isn't just a defense deal. It's a bold signal. India wants to be a global player in undersea warfare tech, built in India, for India, and beyond. Ola Electric's bold bet on local battery manufacturing is facing a reality check. Its much-hyped Gigafactory, meant to slash dependence on Chinese imports and boost margins, is running behind schedule, triggering concerns over cost overruns, missed government incentives, and tech obsolescence. Built through its subsidiary Ola Cell Technologies, the 5,500 crore rupee project was to scale up to 6.4 gigawatts capacity by April 2025. But according to ICRA, Ola hasn't touched a rupee of the 1,227 crore rupees allocated for this expansion. The delay could impact its eligibility for a chunk of the 18,100 crore rupee PIL scheme, where milestones are tightly linked to timelines. This project delay should have been flagged earlier, especially given its impact on profitability, says Amit Tandon of IIAS. Ola's own estimates showed margin expansion once in-house cell came online. Instead, its Q3 FY25 losses ballooned to 564 crore rupees. Ola claims commercial cell production will start in Q1 FY26. But with 40% erosion in stock value this year and missed PIL targets already flagged by IFCI, the clock is ticking. Analysts warn that unless Ola ramps up quickly or outsources, the dream of a 20-gigawatt gigafactory remains just that, a dream. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a great day.